Welcome to this week's ASX strategy session. Thanks for joining me. Great to have you with me this week. Lots of interesting things going on in the markets. We've got some volatility coming into the stock markets. Also some movement going on in the commodities. Commodity prices pulling back. I want to have a look at that and see what that could mean for the commodity stocks and the commodity prices themselves moving forward. Not a live session this week. I'm sorry, I couldn't make the timing work, so I'm recording this at around 2 p.m. Sydney time on Friday afternoon. So sorry if you're one of my regular strategy session live viewers. Back to the normal format next week, and I look forward to taking all your stock suggestions, having a look at the charts for those, and answering all your other questions then. As always, today is general commentary only, doesn't take your personal situation into account. So, having gone through and said all that, I think we should just jump into our first chart. So I've got the ASX 200 to start us off with. And this has been a week of very little overall movement. There's been a bit of movement on the individual days, but as an overall week, not much has gone on. Tuesday was probably the most eventful day. We saw the market come back about 1.5%. That made the headlines. But when you look at the entirety of the week, ASX 200 is only a little bit above where it was at the close of trading last Friday. And this really is typical of consolidations. The day-to-day price swings are there, but often the market doesn't move that far overall in a consolidation. It's just a lot of back and forth. So what does all this mean? And where do things go from here? Well, I'm continuing to treat this price action from the April high as a pullback within an overall bullish trend. At this stage, I don't see the evidence to suggest that the ASX 200 has made a lasting peak and has started a larger decline. Instead, I think at this point, the way I'm viewing this is that the peak we had in March, I'm thinking that's more of an interim peak, an interim high, where the market then consolidates and then potentially, well, at this stage, I think pushes higher later in the year. When in the year that is, I don't know. But I do think that the new highs can follow this period of consolidation. Now, of course, the price action can always change, and this is something we've always got to be looking at. We've got to be looking at how the price action is evolving. But for now, I'm working on the basis that the underlying upward trend that we've had in place over the last 6 months, I'm working on the basis that trend is still to the upside. And it's interesting just to look at the most recent price action just over the last 3 weeks. And you can see that prices have been compressing within this tight or this narrowing range that's been taking shape. And you can actually see this better if I click to an hourly chart. I'm just going to blow up this area over the last 3 weeks. So we're on a daily chart at the moment. Click over to an hourly chart. And this is the period just in here from the last 3 weeks. And you can clearly see this narrowing band that the market's been trading in. And what you notice here is that the highs are getting lower and the lows are getting higher. So there's actually a name for this type of pattern. It's called a triangle trading range. You can see because the prices narrow into an apex. And I think that what this little pattern on the charts does, it gives us some key areas or some key levels to keep an eye on. So for me, the key levels are Wednesday's high point at around 7,680 and Thursday's low point at 7,520 thereabouts. I think a break of either one, either a break of Wednesday's high or a break of Thursday's low, would then likely see momentum pick up in the direction of the breakout. So let's just come back to the daily chart. And so just looking at this range. So a break, whether it breaks to the top or the downside, I think that's where we do see a bit of momentum gather over the over the days or maybe a week or two thereafter. Whichever way it does break, though, I think it is still part of an ongoing correction of that rally off the October low. And as I've said before, I think this could take several months to play out. It's already been 1 month, and I think there could be a few more months to go before we get an end to this corrective period. And one thing to remember with corrective periods when they happen is that they're often messy and they lack consistency. So there's back and forth, and they don't have clear momentum to it. So they lack the consistency of a rising upward trend, which is often quite. You get that overall momentum, which can persist for some time. You get those shorter pullbacks, but then the broader momentum continues. When you go into a corrective phase, like this is looking on a larger scale, you can see the consistency of the rising trend, and then you can see the messiness of the consolidation. That's what I think we're currently going through now. No way to know. There's no way to know what path this is going to take. We could get a situation where the market rallies and then comes off again, or where it falls and then starts to rally. But I think the overall pattern to look for over the next few months is just choppiness and overall messy price action. I think the key is to know your exit levels. And respond to the price action, not the headlines. So when we get some down days, if we get some volatility, you'll see those in the headlines, but it's the overall price action which I think is the key to watch, and knowing where to cut the stocks you have in your portfolio, stocks which are doing well or stocks which are starting to fall back. When do you hold them? When do you cut them? And as I've been telling you, my focus is to stay with stocks, which have done well. I don't want to be selling profitable positions unless they break down. I think that's a really important part of having an outperforming portfolio over time, is that you hold your best stocks whilst it makes sense to do so. I'll just quickly jump over and show you my portfolio. So just jump into this is my self-wealth portfolio. It's my own one, my personal, my private portfolio. And I'm just going to jump into the stock section. And so these are all the stocks in the portfolio. I'm just going to order them from highest to lowest. And what you see here. So these are my best stocks. So I think there's 7 or 8 which are up triple digits, up over 100%. So if I'd been selling any of these stocks every time the market had some sort of pullback, well, I wouldn't have this batch of stocks which are doing really well. And these are the key performers in my portfolio. Without these, I lose my outperformance. It's imperative to let your best stocks run and to make as much as you can from them. And but look, having said that, I'm also not hesitating to cut stocks when they're not working. So we can scroll down the list. I think there's about 55 stocks in the portfolio. Scroll down the list. These are the and you can actually get this on the Motion Trader website as well. You can see the portfolio there and how it's performing. And down the bottom end, these are the loss-making stocks. So there's not too many of them. Down 0.5% to down 10.2%. There aren't too many of them. That's not to say that I'm an excellent stock picker and all my stocks go up. That's not true at all. Far from it. I have plenty of loss-making stocks, but I'm diligent at kicking them out of the portfolio when they're not working. So that's why there's nothing worse than the 10% loss there, because I've got my stop losses, I've got my time stops, and if a stock's not working, I turf it out. I throw it out of the portfolio and I bring in something new and just keep that rotation going. If they work, they stay, and they may end up in the top section of the portfolio. If they falter and they start to lose momentum and not going anywhere, they go out to the exit. So that's what I'm doing. And that's, I think, what we need to do with the portfolio. We need to manage risk. Managing risk is always a priority. But at the same time, I think we need to be able to see off moderate volatility. Like seeing off that moderate volatility, I think it's essential if we're going to stay on these large trends. these trends haven't gone up in a straight line. There's been a lot of backing and filling along the way where they've gone up, then they've consolidated for maybe a month or two or three, then they've gone up again. So you've got to be able to see off those moderate bouts of volatility to stay on these trends. Some of these stocks have been hitting new highs in the last 2-3 weeks. So the market's been pulling back, but doesn't mean every stock pulls back. So that's why I say don't manage your portfolio based on the headlines you might see in the media, based it on the price action you're seeing in your stocks. If they need to go, they need to go. But if they're doing well, don't get scared out of good positions. I think it's the worst thing you can do, selling good positions for no reason other than you've seen a headline saying, "Oh, the market's a bit jittery," and also it's not a case of just holding your best stocks no matter what. I certainly don't do that. I've got those wide trailing stops, which I talk about pretty much all the time. I'm always talking about using those wide trailing stops. They never get me out at the high, but they keep me in some of these big trends for a long time, and that's the key to seeing off some of these pullbacks that we see and that we're seeing now in the ASX 200. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. It just tells YouTube that you're engaging and you're watching, and then YouTube takes the message that, look, this stuff might be good material, and it shows other people, and that helps me a lot. I get more viewers. So please do those things. Like, leave a comment. If you haven't hit the subscribe button, maybe do that as well. Now, I'm going to move on to the small ordinaries. I've got the commodities to go through. I've got a couple of stocks I want to have a look at. But that wraps up the free section. That's the end of the free section for today. If you're not a strategy session member, there's a link below. You can join. Costs you very little. A lot of information coming your way if you come on board the strategy session. So think about doing that. Okay, so let's move on to our next market. So I'm going to look at the small ords.